Hello everyone, welcome back to Stock Market Meridian. Today is 10th July 2026 and you're watching today's post-market report. Let's begin our video with today's market action. Today's trading session turned out to be a very positive for Indian markets. Both Nifty and Sensex opened with a strong gap up and closed with gains of more than 1%. The IT sector also witnessed strong buying interest, mainly because of TCS delivered results that were largely in line with market expectations, easing investors' concern. Another positive trigger was the sharp decline in crude oil prices. At one point, Brent crude oil slipped below the $75 per barrel mark, despite the ongoing geopolitical tensions in Middle East, which boosted overall market sentiment. Talking about the geopolitical situation, the US-Iran conflict continues. And now Israel has reportedly warned Iran that it could launch retaliatory strikes followed the recent attacks involving Bahrain, Kuwait and Qatar. At the same time, several international media reports suggest that the United States is once again willing to resume negotiations for a possible peace deal. Whether these reports turn into reality remains to be seen, but we will continue tracking every development. What do you think about these ongoing conflicts? Do you believe a peace deal agreement is possible? Let me know your opinion in the comment section. Moving to the next update, mutual fund industry created new record. India's mutual fund industry has achieved another historic milestone that industry totals asset under management increased to 82.2 lakh crore rupees in June month compared to 81.5 lakh crore rupees in the previous month. Investor participation in equity mutual fund remained extremely strong. Active equity schemes received net inflow of nearly 28,973 crore rupees, significantly higher than the previous month 22,908 crore rupees. Among various categories, mid-cap funds attracted the highest inflow of 6,090 crore rupees, followed by small-cap fund with 5,600 crore rupees, while large-cap funds received 2,067 crore rupees. On the other hand, debt mutual fund witnessed a heavy outflow of 1,09,000 crore rupees. However, this was mainly due to quarter-end tax payments and corporate treasury adjustment rather than any structural weakness. Overall, although the industry reported a net outflow of 52,949 crore rupees, it was still an improvement compared to the previous month's outflow of 64,021 crore rupees. This data clearly indicates that retail investors continue to remain highly optimistic about the long-term growth of Indian equities. Next important update is the Ministry of Health and Family Welfare has introduced a major regulatory change to curb the misuse of high alcohol liquid medicines. From now onwards, all oral liquid medicines containing more than 12% ethyl alcohol, including certain cough syrups and medical tonics, have been bought under Schedule H1. This means these medicines can now be purchased only with a valid doctor's prescription. Medical stores will also be required to maintain detailed sales record and reserve prescriptions for inspection by drug authorities. The government clarified that these medicines are not banned. The objective is simply to prevent misuses and ensure responsible medical supervision. This type of news is generally a negative sign for pharmaceutical companies. Before moving further, a quick reminder. Every morning before market opens, I upload a detailed pre-market report, and also every evening after market close, I bring you a complete post-market report covering global markets, companies updates, important economic developments, and everything that can impact the stock market. So if you don't want to miss any important market updates, make sure to subscribe to Stock Market Meridian and press the bell icon. Moving on, now let's talk about NBCC. According to CNBC TV18, NBCC's outstanding order book has crossed an impressive 1.2 lakh crore rupees. Out of this, project worth nearly 38,000 crore rupees are currently under execution. The company is also expected to receive fresh order worth around 50,000 crore rupees, with management expecting nearly 20,000 crores worth of new projects to be added during the current quarter itself. Adding further strength, NBCC subsidiary HSCL has secured fresh project management consultancy contracts worth approximately 159 crore rupees today. These projects are related to the construction of educational infrastructure across multiple districts of Odisha. Overall, NBCC continues to maintain one of the strongest order books amongst government infrastructure companies. Next important development is India has announced a major revision in its premium automobile imports policy under a framework of free trade agreement with UK. So under the new framework, import duties on premium UK-made cars will gradually reduce it from 110% to 10% over the next 5 years. However, to protect domestic manufacturers like Tata Motors and Mahindra, the government has imposed several safeguards. Only a limited number of imported petrol and diesel vehicles will receive concessional duties. Electric vehicles and hybrid vehicles below 40,000 euros have been completely excluded from the agreement during the first 5 years. Over the next 15 years, India will allow nearly 3.78 lakh UK-made conventional vehicles under this quota-based system, and the government aims to strike a balance between encouraging premium imports and protecting domestic automobile manufacturing. Next company update is Ion Exchange has secured a major international order worth nearly 500 crore rupees from Hyundai Engineering. The company will supply advanced industrial filtration systems for a large Middle East project. Execution is expected to be completed within 18 months. Management also clarified that this is a completely independent commercial transaction with no related party involvement. This order significantly strengthens Ion Exchange international business pipelines. Now let's discuss about quarterly earnings. Indian Bank reported an excellent set of numbers. Total income rose 20,997 crore rupees, registering an annual growth of more than 11% year-on-year. Net profit surged nearly 47% to 3,357 crore rupees. Operating profits grew over 16% to 5,588 crore rupees. The bank's asset quality improved substantially. Gross non-performing assets declined to 1.86%, while net non-performing assets reduced to an impressive 0.15%. Overall, the results indicated strong earnings growth, supported by better asset quality and improving operational efficiency. And another strong performer was Bank of Maharashtra. Total income increased to 9,063 crore rupees. This is up nearly 15% year-on-year. Net profit also jumped almost 27% to 2,020 crore rupees. Net interest income grew over 14%, while operating profit increased by more than 21%. The bank's loan book expanded by nearly 27%, reflecting healthy credit growth. At the same time, gross non-performing assets declined to 1.45%, while net non-performing assets fell further to just 0.13%. Overall, Bank of Maharashtra continues to remain one of the strongest performing PSU banks. And finally, an important update from the electronic manufacturing sector. The Government of India has officially approved the Dixon Technologies and Vivo joint venture. Means under the agreement, Dixon will hold a 51% majority stake, while Vivo India will own the remaining 49%. The joint venture will primarily manufacture smartphones for Vivo in India on an OEM basis. It will also be permitted to manufacture products for other smartphone brands, creating additional businesses opportunities for Dixon. The new manufacturing entity is expected to become fully operational within 1 year. Actually, Dixon Technology is waiting for this approval from 1.5 years. So now this approval further strengthens India's electronic manufacturing ecosystem with under the Make in India initiatives. So these were all the important market updates for today. If you found today's report useful, don't forget to like, share and subscribe to Stock Market Meridian. I will meet you again on Monday's morning with another pre-market report. Until then, thanks for watching. Signing off. Bye bye. Jai Hind.